Mintos raised over 2.8 million in equity from its investors to launch its crypto product. EstateGuru continues to generate losses for investors. Venus24 blames the community for the suspension of its bank accounts, and Triple Dragon Funding reports massive growth in its second month of operations. Welcome back to another P2P platform performance update, where we will evaluate the changes in the portfolio quality across some of the most popular P2P lending platforms. We will also cover important developments that may increase your risk in particular companies. As always, nothing in this video is intended to be investment advice. P2P lending is risky and you should regularly monitor the latest events surrounding your portfolio to make more educated investment decisions. Since risk evaluations can be complex and time-consuming, we have just launched a platform risk evaluation score, which is a simple safety score that takes into account the platform's performance of its outstanding portfolio, together with structural safeguards such as the operational history, financial reporting, and identified red flags. The score measures the likelihood that the platform will fail to deliver on its promises to investors. The higher the score, the safer the platform. The lower the score, the less transparent and hence riskier your investment. This score enables us to evaluate platform risk equally across the entire industry. Note that this risk score does not include lender, country, or borrower risk. If you would like to dive deeper into those aspects of risk management, head over to our lender ratings or consult our country risk page. You can now also sort platform reviews by this safety score, which is a great initial filter for risk-cautious P2P investors. For additional information, please review our platform risk methodology on P2P Empire. In this table, you can see how the industry has performed over the past month. Mintos reports that it has raised 2.8 million euros from nearly 6,000 investors. The funds will be used to pursue a banking license and launch trading tools for crypto and individual stocks. This means Mintos continues to expand as a multi-asset platform. When it comes to the loan quality, over 123 million euro of investors' funds remain locked in pending payments or suspended lenders. It is fair to expect that a large portion of those funds will be written off sooner or later. Their funds in recovery represent roughly 19% of Mintos' entire outstanding loan portfolio. EstateGuru portfolio decreased significantly over the past month, mainly due to some partial recoveries. Currently, over 60% of the platform's portfolio is non-performing. EstateGuru recently recovered some of the loans, however, the actual recovery or loss rates have not been published. The platform likes to remind investors that they spend between 100 and 150k on legal costs each month. However, it does not mention that those costs are passed on to investors, which increases their losses. Investors will only be informed about the cost deductions in the loan updates. PeerBerry continues to operate in a stable manner. The portfolio increased slightly, reporting excellent performance of 100%. This means investors don't face any liquidity issues or heightened default risk, as the platform continues to honor its obligations. PeerBerry also reported the repayment of several long-term loans from Aventus Home and SIP Group last month, generating solid returns for investors. To learn more about the plans for Aventus Home this year, you can watch this PeerBerry review update or listen to the interview with the CEO Andrius Trofimovas on P2P Empire. Robocash's portfolio amount decreased over the past month. The majority of its loans are used by Financial to fund its business development in Asia. InRento reports a steady growth. The platform recently surpassed 55 million euro in outstanding portfolio, making it the best performing real estate platform on the market. Based on our platform risk score model, it is also one of the safest platforms considering the portfolio's performance alongside structural safeguards, as you can read in our InRento review. Esketit reports a decrease in outstanding portfolio amount. The platform is managing over 45 million of investors' funds. Most of them remain illiquid, as the platform disabled all liquidity tools during its transition to the Croatian entity. The platform also onboarded a new lender, Jet Finance, which is part of the Mogo operation in Kazakhstan. The company presents solid financials with the option to earn 10%. The downside is that the loans are issued in Kazakhstan, which carries moderate to high country risk. Additionally, the loans have a 5-year long term, meaning you would need to rely on the lender's ability to continue operating successfully in this market throughout the entire loan period. Relying on the option to exit before the end of the term is not a good strategy, as Esketit can remove all liquidity tools at any time. Indemo continues to report solid growth over the past month, thanks to its ongoing cashback bonus, which allows investors to earn up to 5.5% with our link on P2P Empire. Indemo reported fast tracking of one debt recovery last month, which you can read about on their blog. Unfortunately, there have been no full recoveries over the last 30 days. It's clear that Indemo is suitable only for very patient investors who don't need monthly income from P2P loans or quick liquidity, which Indemo does not provide yet. Afranga grew significantly over the past month, mainly due to newly launched 16% interest loans from Stick Credit, as well as the newly introduced Safe Smart, which resembles an auto-invest into sticker deeds loans. The tool enables you to lock in your funds for 3, 6 or 12 months at different interest rates. This is a good opportunity for investors who do not want to lock in a 16% interest rate, which is available only for loans with a loan term of 36 months. Nectaro reports a 4% growth rate with 0% funds in recovery. The platform is currently managing over 22 million euro of investors' funds invested in lenders in Romania, Moldova, Cyprus and the Philippines. The financial information for those lenders can be found on P2P Empire. Fintown's growth has slowed down recently, however the platform continues to perform as expected, offering investors the opportunity to either participate in its rental projects with monthly interest payouts or its development project in Costa Rica, which are bullet or full bullet loans with payout at the end of the long term. Triple Dragon Funding reports a massive growth over the past month. The platform is managing over 7 million euro, which is impressive considering they just launched in January. The success is mainly attributed to the high return rate of 14% together with the initially offered instant cashback bonus of 2%. Currently investors can still earn 14% with a 1% bonus for our readers on P2P Empire. To learn more about Triple Dragon Funding, watch our full review here or listen to the entire interview with the founder in our academy on P2P Empire. Income reports a slight decrease in the outstanding portfolio balance. The funds in the buyback initiated category also decreased compared to February. You can review the lender risk as well as the platform risk in our income review. Crowdpear's portfolio also decreased in February. The default amounts remain unchanged. The platform positions itself in the top 3 real estate platforms in our list with strong structural safeguards and good operational history. We have added performance data for VIAINVEST, which provides only quarterly updates on its loan performance. Based on the latest available data, 4.79% of their loans are non-performing and delayed for more than 90 days. TWINO reports a growth of 5%. The platform offered a 200k buyback option for the non-performing Russian loans at a 20% discount on the principal. It's reported that many investors used this option, however TWINO did not publicly communicate the total loss of principal. We have previously informed you that TWINO likes to gamble with investors' money, which is then followed by lengthy recovery procedures. This is supported by TWINO's failed ventures in Vietnam, the Philippines, Latvian real estate, and the Russian loans, which were blocked due to the war in Ukraine. The only lending product that works without issues is the Polish portfolio. Regulatory risk in Poland should, however, not be underestimated. While TWINO announced expansions into new markets, this time Romania and the Czech Republic, note that it will face fierce competition by other lenders who are already funding loans through other marketplaces. While some of TWINO's mistakes have been improved, the company has clearly a huge risk appetite, which may not be aligned with yours. LANDE has increased the share of delayed loans. The amounts in default have not changed compared to February. Capitalia's share of non-performing loans decreased by 2% over the last month, while the default rate on Insoil finance reached 20%. After 5 months of complete radio silence, the CEO of Reinvest24 sent an email to all investors informing them that the platform was in a wind-down mode, working on asset sales, legal enforcement, negotiations and coordination with debtors, and resolving administrative and legal matters, with the goal of maximizing recoveries for investors. Tanal Oro said that from now on there will be centralized project updates on the platform. This does not seem to be true for all projects. For Metropolis, the last update was in 2022 and it revealed nothing substantial. The CEO also blames investors' complaints for payment disruptions. Investors who reported Reinvest24 to the police and the Estonian Financial Supervision Authority caused serious operational disruptions. Apparently, no violations were found, but their payment provider closed the platform's accounts anyway. The CEO said that it has prevented the platform from executing investor payouts or receiving recovery funds from projects. This entire email looks like a typical time-buying letter where management blames others for its mistakes while ensuring they are protected from any legal responsibility. Investors reported that as early as 2024, the platform stopped processing withdrawals. This would indicate that even before the complaints, Reinvest24 did not pay out anything, not even the returns from still operational properties. The fact is that transparency is non-existent and the promised project updates are not available either. The most realistic scenario is that investors will lose most of their funds. The last available data showed a non-performing portfolio of 26 million euro. Reinvest24 is not the first failed platform, and it certainly won't be the last. something you as an investor should be aware of, especially on high-yielding platforms with shady management and known red flags. The rest of the industry does not publish much performance data, and if they do, it's outdated, so there is not much to report about. The takeaway from this video is that risk can materialize at any time and that P2P lending is not risk-free. High-risk platforms that we don't regularly report on keep growing their portfolios by multiple millions every month, often promoted by influencers who are primarily concerned with their own commissions rather than your financial situation. And if red flags are pointed out, they just shrug their shoulders. In a week or two, the red flags are buried by cashback promos and high yields just to keep the funding going. New investors barely do the research required to evaluate the sustainability of a business model, yet alone expose the Ponzi schemes in the industry. Being able to critically review a platform based on publicly available data will already put you ahead of most investors and will likely improve your long-term performance in P2P lending. That's it from this month's update. If you have found this video helpful, hit the like button and subscribe for more updates. Thanks for watching, and I will catch you in the next one.